Imagine you wake up tomorrow. You open your phone. Markets are up. Inflation is down, and the Federal Reserve just announced its new interest rate policy by barking 3 times at a tennis ball. Sounds insane, right? But here's the thing. When you actually break down how dogs think, how they behave, how they spend, how they trust, you start to realize maybe they do a better job than we think. First, let's talk money. In a dog-run economy, cash is gone. Finished. Deleted. The currency? Treats. And before you laugh, this is actually sound monetary policy. Treats are scarce. You can't print them infinitely. There's no quantitative easing where the Fed just bakes more biscuits and floods the market. Supply is controlled. Demand is always high. Economists call this a hard currency, and historically, hard currencies hold their value. Gold did it for centuries. Bitcoin tried to do it digitally. Dogs figured it out with chicken-flavored snacks. The inflation problem we've battled for decades, solved by a Labrador. Now, let's talk about how dogs spend. Dogs live by one rule. If it feels good right now, do it. That sounds reckless, but here's the financial flip side. Dogs don't take out mortgages they can't afford. They don't buy crypto on leverage at 3 a.m. They don't rack up $9,000 in credit card debt buying things they'll never use. Why? Because dogs only want what they actually need. Food, shelter, a walk, affection, maybe a squeaky toy. Behavioral economists have spent decades trying to teach humans something called needs-based spending, spending aligned with real value, not status or anxiety. Dogs mastered it at birth. In a dog economy, there are no impulse purchases, no Black Friday stampedes, no buy now, pay later traps, just honest, present tense consumption. Your financial advisor wishes you thought like a golden retriever.
Here's where it gets really interesting. Banking. The entire financial system runs on one thing: trust. You trust the bank holds your money. The bank trusts you'll repay the loan. Investors trust the market will grow. And what animal on this planet is hardwired for trust more than a dog? Dogs don't diversify their loyalty. They don't have offshore accounts. They don't hide assets in shell companies in the Cayman Islands. A dog picks a human, and that's their bank. Unconditional, transparent, always available. In a dog economy, banking runs on loyalty, not fine print. No hidden fees, no 47-page terms and conditions, no "we've updated our privacy policy" emails that nobody reads. You bring the treat, they bring the trust. Simple ledger, clean books. Now, could this system be manipulated? Sure. Anyone who's ever faked throwing a ball knows dogs can be fooled. But even then, they come back. They forgive. That's actually a feature, not a bug. Resilient economies bounce back. They don't hold grudges. What about leadership? Who runs the central bank? Simple, the alpha. Not the richest dog, not the most politically connected dog, the one the pack respects. And here's what's fascinating. In dog packs, the alpha's job isn't to accumulate, it's to protect and distribute. Resources don't pool at the top. The pack eats together or it doesn't eat at all. That's not socialism, that's not capitalism. That's just functional economics. The dog version of Jerome Powell doesn't give confusing press conferences about data dependency. He just reads the room. Is the pack hungry? Move. Is the pack safe? Rest. Real-time policy. No 6-week meeting cycles, no leaked memos. Just instinct, adjusted daily. Look, dogs aren't running our economy, unfortunately. But embedded in this ridiculous thought experiment is a very real question. What would our economy look like if it was built around trust, loyalty, real needs, and present moment thinking? Less debt, less greed, less anxiety, more transparency, more resilience, more tail wagging. The next time markets crash or inflation spikes or a bank collapses, just remember, a dog would have seen it coming.